The role of financial statements in corporate tax compliance in the UAE. Overview of financial statements in tax calculation. Financial statements are essential documents that record the financial activities and overall performance of a business. Under UAE corporate tax law, the accounting income, profit or loss of a taxable person, as stated in their financial statements, serves as the initial reference point for calculating taxable income. This starting value forms the basis for determining a taxable person's liability, as adjustments may be made according to tax laws and regulations to derive the final taxable income. Accounting basis and revenue thresholds. Revenue thresholds dictate the accounting method a taxable person must use when preparing their financial statements. Cash basis of accounting is permitted for taxable persons earning revenue not exceeding AED 3 million during the tax period. This method allows businesses to recognize income and expenses when cash transactions actually occur, simplifying financial reporting for smaller entities. When a taxable person's revenue exceeds AED 3 million within the tax period, they are required to adopt the accrual basis of accounting, unless exceptional circumstances apply and prior FTA approval has been granted. The accrual method requires revenue and expenses to be recorded when they are earned or incurred, providing a more accurate reflection of financial performance. Application of accounting standards. Financial statements must be prepared in accordance with the International Financial Reporting Standards, IFRS, to maintain a uniform definition of accounting income across various business sectors and industries. This ensures consistency, transparency, and comparability of financial information within and beyond the UAE. However, there is flexibility for taxable persons with revenue not exceeding AED 50 million. Such entities may apply IFRS for SMEs, small and medium enterprises, which offers simplified standards suitable for smaller businesses, reducing administrative burdens while maintaining sufficient accuracy and compliance. For a detailed examination of accounting standards applicable to corporate tax, taxable persons are encouraged to review Ministerial Decision No. 114 of 2023 on accounting standards and methods for corporate tax purposes. Submission of financial statements to the FTA. The Federal Tax Authority, FTA, has the authority to request the submission of financial statements that are used to determine a taxable person's taxable income. This request may be made through a formal notice or decision. For taxable persons who are partners in an unincorporated partnership, the FTA may also require the submission of financial statements that detail the overall assets, liabilities, income, and expenditure of the partnership, as well as the partner's distributable share of these elements. Requirement for audited financial statements. Certain taxable persons must maintain audited financial statements. This means their financial statements must undergo verification by an external licensed auditor to ensure accuracy and compliance. The requirement for audited financial statements applies to the following groups. Taxable persons whose revenue exceeds AED 50 million during the relevant tax period. Qualifying free zone persons, as defined by the applicable laws and regulations. For additional guidance on maintaining audited financial statements, taxable persons should refer to Ministerial Decision No. 82 of 2023 on this subject. For more details, contact us.